Right, today's topics from Breakingviews. RBS lets down its customers for getting what and for who a bank is for. And how central banks are storing up trouble by printing money and shoring up banks. With me is Peter Larson. Quite remarkable, this RBS story, Peter, over the weekend. Are you an RBS customer?
I'm not, actually.
So you didn't have to go to the bank this weekend then.
No.
But really, in terms of public relations, in terms of basic banking services, I mean, this is extraordinary.
It is. It's not great. I mean, I think we just have to see kind of really what happened here and what the reasons were. I mean, to a certain extent, the problem with IT systems is that they go down, and you know, large companies, even Thomson Reuters, knows that that can happen occasionally.
Yeah,
the question really is whether there's something more fundamental here. You know, people are asking the question: is this the end result, the result of all the cost cutting in the shred years at RBS that is now coming home to roost? Is there something more fundamental happening here? So we'll take some time to work that out. But I think the point we're trying to make is that there is a drive on in the UK to try and charge for banking services. You know, there's this big problem, which is that banks don't charge for their core service, and that means that they have to try and make up the money elsewhere by mis-selling insurance products or by charging big fines for people who go overdrawn. And so the regulators recognise this problem, the bankers recognise this problem, they're trying to shift it. But things like this really aren't going to help, because when you can't get your money out in a sort of you know, for a couple of days, the idea that the bank's going to then come along and say,
sure,
pay £10 a month for this is
how I mean,
difficult.
I heard bits and pieces on Friday and Saturday from the communications people, the PR people. How do you think they have fared in their to claw this back, if you like?
Well, I think if you take as given the fact that this system was going to go down for the period of time it went down, their response has been pretty good, in the sense that they immediately said, well, we'll compensate anybody for any problems. They've extended opening hours in the branches. We even had branches open on Sunday, which is very unusual. So I think they're doing what they can to try and sort of be helpful. But it does sort of raise that doubt in people's mind, which is, you know, I sort of assume I stick my card into the cash machine, the money comes out. I assume that my company pays me every month. Yeah. I assume that if I'm buying a house, the transfer goes through. And when it doesn't happen, it creates uncertainties, and we'll have to kind of see what the long-term repercussions are.
I've got an irate builder on my bank who thinks I didn't pay him, actually,
well,
as a result of this. All right, this piece that you wrote, the world's central banks are running out of road. I mean, we hold this up, you know, either the banks go to the measures they've gone to and spend the amount of money they spend, or what's the alternative? A global slump, you say. And the BIS needs to get its head around this idea.
Well, and the BIS is the central banker's central bank, so you know, they're kind of representing the sort of the orthodox view. And the point they're making is that central banks are kind of sort of seen as the superheroes of the financial crisis. You know, every time there's another crisis in the Eurozone, everybody says, well, Mario Draghi is the only person who can save us. And when the US economy wobbles again, people say it's up to Ben Bernanke to do more. And the point they're making is that actually the pressure on central banks is the policies they put in place are running out of effectiveness. You know, there's only so many more bonds you can buy. There's only so much more cash you can lend to banks in Europe, for example. And that these policies are storing up problems. They're delaying the impetus to reform for governments and for commercial banks. They're distorting the credit allocation process. They're potentially inflating asset bubbles in emerging markets. And the longer these policies go on, the harder they will be to unwind. And so the BIS is sort of saying, you can't rely on us. You have to, you know, governments and others have to make these adjustments. But the problem is, governments are also quite indebted. And so, you know, for example, the BIS has this analysis where they say, in order to get government debt levels back to pre-crisis levels, every major economy would have to run a 2% surplus a year for a decade. Well, if they did that, you'd have a global depression. And this is kind of the problem with this, with the central bank's position, is that if we have a worsening slump, then actually all the arguments that they're portraying for their independence, for a price stability mandate, for trying to maintain their credibility, all of those become even harder to defend if things get worse. So the only real outcome is that, despite their reluctance, they will probably have to do more.
Okay. Peter, many thanks for that. Peter Larson. If you want to watch our US Breakingviews show, that comes on every day, 12:30 Eastern, 17:30 BST. I'm Axel Threlfall. This is Reuters.